Hi, I'm Jack and I'm an advisor at the Mortgage Hut. If you've missed a payment on a loan or ignored a debt, you might be one of the thousands of Brits with a default on your credit report. Defaults on a credit file are one of the most common reasons for the refusal of a mortgage by many lenders, especially on the high street where generally only applicants with clean credit history are approved. The advisors we work with are some of the best specialists in the UK and successfully arrange mortgages for people with defaults every day. So even if you've been rejected for a mortgage because of a default in the past, it may still be possible for you to find a lender elsewhere. The important thing to remember is that every lender is different. Some specialise in low rates and lend to customers with clean credit, some specialise in self-employed lending, some specialise in adverse credit. Thankfully, there are several mortgage lenders who are happy to approve applicants with all sorts of defaulted credit accounts on their file. Working with a mortgage broker can help you locate these lenders quicker without the hassle of having to compare hundreds of rates yourself. A mortgage broker will know the lenders that offer the more favourable rates and terms for borrowers with your circumstances, and it can advise you on the areas where you can save money throughout the mortgage process. Be as open and honest as possible so your expert can help find you the best deal. Your mortgage advisor can only recommend lenders based upon what they know about you, so it's best to be upfront about your finances and circumstances from the get-go. Conversations you have with your mortgage advisor are completely confidential, and inaccurate information will only compromise and slow down your application process. Delays can cost you time and can result in you missing out on a better rate or losing your dream property. Yes, they are. All lenders will consider a secured loan or a mortgage payment default to be very serious and weigh them accordingly when making a decision. However, some lenders are more relaxed about, for example, missed payments on a mail order account or mobile phone contracts. Defaults on credit cards and loan repayments fall in the middle ground. A default will stay on your credit file for 6 years, which could affect your ability to access credit in the future. However, despite what many people think, it is still possible to find a competitive adverse credit mortgage with a default or defaults on your file. The longer a default has been on your record, the less impact it is likely to have on the ability to obtain a competitively priced mortgage. Most people assume that repaying bad debts is important when it comes to being approved for a new borrowing, but strangely, this is not always the case in the mortgage world. Yes, it will almost and certainly improve your credit score if you have satisfied your defaults before you apply for a mortgage, but it's not always essential with the more flexible lenders that specialise in bad credit mortgages. Generally, the lenders that accept defaults are only concerned with when they were registered, not the dates of settlement. So mortgages with unsatisfied defaults are just as likely to be approved, so as long as the dates of registration are within their criteria. Generally, adverse credit mortgage lenders are tighter on their affordability calculation than some of the high street lenders. If you have a clean credit history, you can borrow up to 5 times income, sometimes more in certain exceptional circumstances. If you have defaults, your maximum borrowing may be limited, as the lenders who take on higher risk for those with adverse credit like to minimise the risk elsewhere. Hence, they may require a higher deposit in the majority of cases. If the adverse credit issue is over 3 years old, it may be possible to borrow up to 4.5, maybe 5 times income, but usually maximum loan sizes are around 4 times your income. Generally, the more severe the adverse credit, the higher the risk is perceived to be, and so the lenders accepting a higher risk will limit loan to income to a greater degree. Income is also a changing concept. All lenders accept 100% of basic salary, but some will only accept 50% of overtime, bonuses and other additional income. Some will demand 3 years of self-employment, whereas others are happy to lend to those with 1 year's trading. Some demand those in employment to have been in the same role for 12 months, whereas others are happy to accept an applicant in a new job if they have an employment contract. Maximum loans are also limited by outgoings and financial commitments. Those with personal loan repayments of hundreds of pounds per month are less able to afford the new payment than those on the same income with no other commitments. Yes, even if you know you have defaults, you should still check your credit rating to ensure there isn't anything else on your file which might adversely affect your chances of being approved for a loan. Issues such as late payments or arrears on a loan will also negatively affect your score, as will more significant matters including CCJs, IVAs or declarations of bankruptcy, and it's important that you have full details of any of these are relevant. Although there is no fixed credit rating that lenders will require before offering a loan, keeping your credit as healthy as possible will only increase your chances of approval. You also need to know exactly how many defaults you have and when these occurred. Lenders will often have strict rules as to the level of defaults they will allow before declining a mortgage application. You can usually obtain your credit reports once a year from each agency free of charge, so there's no excuse not to gather this information before applying for a mortgage or any other type of loan, particularly if you're aware of any potential reasons for rejection. Many commercial lenders won't consider an application for someone who has default on a loan within the last 2 years. So before hastily applying for a loan that might get rejected and cause your report further damage, check with a broker. They can go through your report and highlight the areas that lenders will focus on, as well as give you guidance on how you can improve your chances of approval for a commercial mortgage with a default. At the Mortgage Hut, we have a team of specialist brokers who understand the market inside out and know exactly where to turn to find the best deals on adverse credit mortgages with defaults. With unlimited access to the market and exclusive rates that are not available on the high street, we can help you fully consider your options. We can also help you with your mortgage application and provide personalised mortgage advice. Call or use our online chat for free initial advice. A quick call would be the kickstart you need to get into the property ladder.